Hey everyone, Tommy V with 81 Real Estate. Got another spreadsheet tool here for everyone to use to help you be a better investor, make good decisions. So once you've already figured out what your repairs need to be with the rehab sheet, you've already ran your estimate with the rehab calculator, you're over a 6 or 7% cap rate. Ideally, you're double digits. Maybe you're thinking about doing cash or leverage. Now that you have the property and you're trying to track your real expenses month to month to make sure that your accounting makes sense. And when you pass it off to your accountant, they're going to be able to turn it into the IRS in a way that makes sense and is going to help you keep the most money in your pocket. So this right here is my own made profit loss sheet. You're going to want one of these for every rental property that you have. It's just an easy way to capture all your income, your expenses, and then categorize them correctly according to the IRS rules. Over here on the right side, these are the IRS categories related to real estate expenses that you are allowed to deduct: advertising, auto travel, cleaning, maintenance, commissions, insurance, legal and professional fees, interest on your loans, repairs. This is different than renovations, and we'll talk about that in another video. Taxes, utilities, wages, salaries, depreciation, property management. I don't have the depreciation here because I don't recall it off the top of my head for this particular property. But your account will be able to help you with that. And we'll talk about depreciation in a different video because you have to separate land from the building. So this is a profit loss sheet that I created. There's many different ways to lay this out. You can do monthly statements. You can do it kind of more of a put the months vertically. This is the way that makes sense to me, and I chose to do it. You just have to figure out a way that works for you, that is clear to you, your team, and your accountant, so it makes sense to everyone. Up here, we put what is titled in, the property address, when you purchased it, and when it's in service. The in service is important because your accountant will be able to advise you. There's different rules of, okay, if it's 6 months or more out of the year or 6 months or less out of the year, kind of affects how some of these things come out. And you need to know if you can get a full year for all these discounts or if it has to be prorated for fair rental days. And that's getting in the weeds a little bit, but you just need to know when you purchased it and when you put it in service, officially having a tenant moved in renting it. Over here we have the months, if it was vacant or not. As you can see, one thing that jumps out is we have two different rental rates. Our previous tenants were way under rented. They were getting a steal of a deal, and we told them we had to raise the rent, so they moved out. So they moved out. We did a ton of repairs. We hadn't done really any renovations on this house in many years, and it needed a lot of work. So we spent all this money doing a turn, or when you go from one tenant to another, it's called a turn. And then we have the high rental rates listed here. One thing to note is that when you're doing rental properties, that first month, you cannot prorate that first month of rent. So if a tenant moves in on the 1st, the 15th, or the 30th, they have to pay the full rent amount for that first month. And then what you do is you prorate the second month based on that move-in date. And that allows rent to always be due on the 1st and gets everybody synced up on the same calendar. Because if you started your lease on the 15th and then your payments were always due on the 15th, that's going to be a lot of extra headache. If you have multiple properties, bank accounts, money coming in and out, it'd be very confusing. So you full amount in the first month, regardless of the move-in date, make it due on the 1st, and then you prorate the second month. So the first month, $2,000, second month prorated, $333. And then from there forward, $2,000 being paid on the 1st of the month, and you got your steady rhythm going. This shows the total rent income we brought in on this property. This is what we owed the property manager. Again, the property manager, you just pay how much rent they bring in. So for that small month, we paid a small amount of property management. For this particular loan, I don't remember the exact numbers. I just put 400 in interest here for our debt pay down. This is our escrow and taxes, insurance and taxes that I put down here. Divide by 12, throw them in there. And then the homeowner's insurance, budgeting for the homeowner's insurance each month, then it's not a surprise cost when you have to pay it. I like to have a missed expense category. So if you have any repairs, tenant move-in fees, surprises come out, then you're able to account for them on one place. You don't have to have different columns or additional spreadsheets, just one snapshot. You just make the cell up here. You can pick accounting for your categories. And if you do something in percentages, then it's a loss. So these months were negative because these were when the property was vacant and we did the property turn, but we had to still pay the loan, the taxes, and the insurance. And so that all added up down here. I like to keep a list of my repairs or my MISC expenses that come in here. So we did replace the air conditioner, did some interior and exterior paint, landscaping, miscellaneous repairs, lights, closet doors, shelves, deep cleaning the appliances, servicing the electrical. There's a couple items that just kind of add up whenever you turn a property. When you place a tenant with a property manager, they'll keep that first month of rent. While it was vacant, we had to pay the utilities. It was kind of my total expenses there. All of these are going to line up to categories over here that we can keep track of and use it to offset our gains at the end of the year, especially when you're using an LLC for your properties. We'll go into a little bit more detail about some of these items, but this is the easiest way for you to keep track of really how much money is coming in, really how much money is coming out, and then putting it in those categories. So when you turn this into your accountant, they have everything they need. They don't have to keep emailing you back and forth, and you're not going through old emails and old bank statements to try to figure out what's going on. Another easy thing you can do when the payment really comes in and is really in the bank or has really left the bank, then sometimes we'll even mark it green. So we know, okay, I really had that money coming in. I really paid this mortgage payment, the HOA that's being set aside. Like I moved all the money into the correct buckets, and then you are really keeping track of your expenses really tight to keep it nice and organized. If you think this would be helpful for you, I'm going to leave a link down in the description for a link to buy this. And if you have any comments, questions, concerns, please, we like to be interactive and I'll answer as many questions as I can. Thank you for your time.